Can we tell you something interesting? Bitcoin just surged to another more than 2-year high on Wednesday, pushing its market cap back over $1 trillion as the growing success of the US spot Bitcoin ETFs turned investor sentiment more positive. The flagship cryptocurrency was last higher by 4% at $51,789 according to Coin Metrics, and recently it rose to $52,079, its highest level seen since December of 2021. Its market cap rose above $1 trillion for the first time since late 2021. We all thought nothing spectacular could happen, but yet, here we are. This big move was driven in part by increased demand for Bitcoin courtesy of the newly launched US spot Bitcoin ETFs, as outflows from the Grayscale Bitcoin ETF, which weighed on the market sentiment for the earlier part of January, have greatly diminished. An expert noted, yesterday we saw $651 million in inflows, the largest daily inflow since launch day. Furthermore, there were 12,000 Bitcoins demanded by the issuers yesterday at a time when only 900 were produced every day. Investors are beginning to realize that demand is beginning to outstrip newly issued supply. Now, according to data provider CryptoQuant, some $9.5 billion of new money have entered Bitcoin market through the funds since they began trading on January 11th. For the past 2 weeks, more than 71% of new money invested in Bitcoin has originated from spot ETFs, not including GBTC. Okay, let's talk more about this rally though. Bitcoin rallied 157% in 2023 as anticipation built for the US Securities and Exchange Commission's approval of Bitcoin exchange-traded funds, which eventually came in January. And then there was a pause. Nothing significant was happening. Yes, the price of Bitcoin dipped after ETF approvals, but investors were still upbeat about the cryptocurrency setup for a year. In addition to ETF inflows, they were also watching out for the Bitcoin halving event, the supply restricting event written in Bitcoin's code that happens every 4 years, which is slated for April. And according to historical records, Bitcoin has seen big rallies to new highs in the ensuing months. If the pace of Bitcoin issuance slows, while demand either remains steady or increases, the effect on the price can be substantial. On February 12th alone, Bitcoin ETFs purchased 10 times the amount of Bitcoin that miners were able to create in a day. Duncan Ash, head of product go-to-market strategy at CoinCover, said. He added, "The upcoming halving will reduce supply even further. If the next halving follows the same pattern, we can expect continued growth in Bitcoin's price during the months ahead." Also, Bitcoin has indeed shocked its critics and rocketed to new highs not seen since late 2021 in recent weeks amid spot Bitcoin ETFs hype. The Bitcoin price has climbed over $50,000 per Bitcoin, making Bitcoin a $1 trillion asset once again and pushing the wider crypto market over $2 trillion, thus forcing the Biden administration to declare a crypto emergency. The thing is that after a leak revealed that the Federal Reserve's central bank digital currency could be closer than imagined, a widely respected bank analyst has predicted that a $6.9 trillion Wall Street earthquake could be headed for the Bitcoin price. As a result, according to Standard Chartered head of crypto research, Jeff Kendrick, what we now see in the US is the 401k market, such as pensions, enter Bitcoin. Adding other assets in the space could see surges that mirror the Bitcoin price rally if a slate of closely watched applications for a spot Ethereum ETF is approved in May. Oh yes, that reminds us, spot Ethereum ETFs are coming. We are about to experience another bubbly moment. For now, anticipation hangs heavy in the air, both on Wall Street and in the crypto industry, as potential approval of a spot Ethereum ETF draws closer. With a possible May deadline set by the SEC chairman Gary Gensler, the question remains, will Ethereum follow Bitcoin's footsteps onto the regulated market? The chance of a close date for the approval of Ethereum ETFs, according to reports, have ignited a wave of optimism across both sectors. The sentiment is overwhelmingly positive, with lawyers, investors, and even established firms like TD Cowen anticipating a green light from the SEC, just like it happened when many were waiting for the approval of a spot Bitcoin ETF. However, not everyone is convinced, and it's not surprising. Some remain skeptical, pointing to Gensler's past hesitations regarding Ethereum's legal status and suitability for an ETF. They argue that Ethereum lacks the institutional support and broad base enjoyed by Bitcoin, the undisputed king of cryptocurrencies. The January 10th approval of nearly a dozen Bitcoin ETFs indeed marked a historic event, considering the number of issuers launching similar products and the relatively new nature of digital assets. This precedent, along with the existence of an Ethereum futures market, could further strengthen the case for an ETF. While TD Cowen is positive of an eventual approval, they believe it might wait until after the November elections. Regardless of the timeline, the potential arrival of spot Ethereum ETF is a significant development, eagerly awaited by both crypto enthusiasts and traditional finance players. These exciting moments in crypto give investors more reasons to hang on, especially long-term holders. Currently, Bitcoin's price is pumping hard, with altcoins such as Ethereum, Cardano, and Ripple following in line. The apex cryptocurrency continues to recover some of the ground lost during the past years. Well, the last 2 months of 2021, down to early January 2023, have been incredible moments of observing the price charts over and over again, and reweighing the options. We guess crypto holders can now breathe a little. An altcoin bullish season is equally imminent since the rise of Bitcoin is a crucial influencing factor for the increase in the price of altcoins. Cardano ADA has been marked with reasonable increases recently. Furthermore, one of the primary catalysts behind this surge in the crypto market is heavy institutional buying observed on Coinbase. This is noticeable in the Coinbase Premium Index, a metric tracking the percentage difference between Bitcoin prices on Coinbase and Binance. The increase in that index is proof of more buying activity on Coinbase, hence increased interest from US-based institutional traders. Bitcoin's journey above the $52,000 mark signals a new dawn for the cryptocurrency, as institutions increasingly recognize the value and potential of Bitcoin. The digital asset is carving its place in the mainstream. The ongoing convergence of traditional finance and the crypto world is a testament to the broader adoption and acceptance of cryptocurrencies, marking a momentous chapter in the history of digital assets. Now, as Bitcoin's price is targeting 2022 highs in the wake of the 2024 halving, the crypto market seems to be as bullish as one can get. One major factor was the SEC's approval of spot Bitcoin ETFs in January. While initial skepticism prevailed among investors and traders, both within and outside the crypto realm, the landscape has since evolved. And yes, there is a lesson to be learned from this experience. It may not be a great start, but patience is key. The decision from the SEC has been strongly anticipated for months. The crypto market has sought a spot Bitcoin ETF as a means to engage US retail investors through an affordable, secure, and regulated investment vehicle. Despite persistent demand, the SEC consistently rejected such applications, citing concerns over the lack of investor protections due to Bitcoin's price determination on unregulated exchanges. As BlackRock CEO Larry Fink put it in a tweet 6 before the decision, Fink's wet dream, 84.9% Bitcoin is a trivial amount to add to BlackRock's massive collection of assets under management. Fink will move the crypto space, beginning with Bitcoin. Prepare while you still have a chance. However, as major Wall Street players, including BlackRock, introduced spot Bitcoin ETFs, the cryptocurrency price initially dropped around 15% following the SEC's approval. But now evidence suggests that Bitcoin ETFs are attracting new capital into the market. Back in January, we assumed that nothing was happening. Institutional demand for Bitcoin has been on the rise though, particularly evident in the stellar debut of the top 2 spot Bitcoin ETFs from BlackRock and Fidelity. Within the first month of trading, these ETFs amassed over $3 billion in assets under management, setting a new record for ETF launches. What's even more interesting is that Wall Street's embrace of Bitcoin. This is evident as big financial firms race to tap into the crypto market. BlackRock CEO Larry Fink and Cantor Fitzgerald Howard Lutnick are among those expressing optimism about Bitcoin's future. Firms like Invesco, VanEck, and Franklin Templeton are using social media to show their support for Bitcoin, with tweets and profile updates reflecting their enthusiasm for the cryptocurrency. This shift in attitude marks a departure from a soured past when Wall Street kept its distance from cryptocurrencies. Now, financial firms are echoing crypto messaging, highlighting Bitcoin as a hedge against government intervention and inflation. As cryptocurrencies continue to gain traction in traditional finance, issuers remain optimistic that mainstream investors will gradually allocate a portion of their portfolios to products like Bitcoin ETFs alongside traditional investments. Everything else falls into place. But that's going to do it for today's video. Make sure you subscribe and hit the notification buttons, and we'll see you in the next video.